Good morning and afternoon to those in Western Australia. Thanks for joining us today. On behalf of NH3 Clean Energy, I'd like to welcome you to this webinar. Presenting today will be NH3 Chairman Charles Whitfield and NH3 CEO Stephen Hall. They'll provide an update on the WA-H2 project before we move into Q&A at the end of the session. I'll now hand over to Charles and Stephen to run through the presentation.
Fantastic. Thank you very much, Simon, and welcome everyone. Thank you for joining us today. I'm cognizant, having looked through the list of registered participants, that we have a fair mixture of both longer term shareholders who are no doubt familiar with the majority of the story of NH3, but also a lot of new investors who we welcome. And so we will be going through a fairly thorough overview of the company, as well as explaining the ramifications of the announcement from yesterday and an update in terms of expected progress and news flow in the coming weeks. So with no further ado, let's jump in. We make the bold claim that we are Australia's leading clean ammonia project, but that is not by accident. That's very much by design. We are laser focused on making sure that we meet the needs of the market, and that means our customers and also the capital markets, for making sure that we have a successful execution of the project. The way that we've done that is by making sure that throughout our selection process, we've always focused on the price, emissions, and volume requirements of the market. And then in terms of the actual project itself, how can we de-risk the project so that we are minimizing execution risk, minimizing time to market, and making sure that we have the highest attributable value to our investors. And that basically has determined the way that we've structured the project. Choice of technology, which is using the blue ammonia route rather than green. And then also in terms of how we actually develop the project, and key to that is the location. We feel that this is an extremely exciting market, and as we'll discuss further on in the presentation, there's huge growth potential in this market. And so part of our planning is to make sure that we can expand our production and have it tailored to meet the needs of the market as it grows. So I talked about location. Our WA-H2 project is located in the Maitland Strategic Industrial Area. If you look across Australia, there are only a handful of sites where you actually have a confluence of gas supply, CO2 sequestration, and water availability. And if you add to that, trying to leverage existing ammonia infrastructure, the ability to have a deep water port, which has ammonia handling, then you really are looking at a very small number of locations. And we feel that Maitland Dampier is top of that list. On top of that, as we'll discuss later, Dampier obviously is a key hub in terms of bulk carrier transport, and that is one of the key focus markets for us and demand for the next decade or so. The other way that we've looked to de-risk the project is by partnering with very experienced industry players who take care of certain segments of the overall plant and project development. So as you see on this slide, we have already secured a large number of very high quality partners in progressing the project. Chevron on gas supply, Water Corp on our water supply, Woodside on CO2 sequestration, Land from Development WA, Petrofac and Topsoe are our key engineering and technology partners. AGIG are providing the pipeline infrastructure for CO2 transportation, And then in terms of sales and distribution, and we'll talk a little bit more about our strategy behind this, but we are in a key partnership with Pilbara Ports Authority, Oceania Marine, and then, as we announced yesterday, MOL, Mitsui O.S.K lines, have joined us in terms of the bunkering opportunity. So let's talk about what the market opportunity looks like and what the growth profile looks like. There is a widely flagged projection of about a 30 to 35% annual CAGR in clean ammonia, and the demand really comes from two main sources. One is Japanese power generation, where clean ammonia is being used to displace coal in Japan and Korea's thermal-fired power stations. And hopefully we'll be able to talk about that a little bit more in a soon to be webinar when we have something to announce on that side. But today, following the MOL announcement, we're more focused on the marine fuel opportunity, which is essentially displacing heavy fuel oil and diesel in shipping, specifically in the bulk carrier fleet, which we see as the lowest hanging fruit in terms of that maritime fuel transition. So how do we stack up in terms of the global market for supplying that demand? We are a globally competitive producer in terms of volume, price, and emissions. We have flagged $600 a ton FOB as our target sales price. Where we have a key advantage over many of our competitors is the cost of transportation of that ammonia to its end market. So if you look at that bottom left-hand chart, that indicates the cost of transport from the US Gulf or the Middle East or from ourselves. So we're about a third of the cost of transport from the US and about half the cost of transport from the Middle East. Both of those considerably add to our appeal to the Japanese market. The other thing is that because we are a consumer of domestic gas in Australia, we get our gas through long-term fixed price contracts. That contrasts to the US and the Middle East, where the US would be tied to Henry Hub, and Middle East gas prices would be tied to oil prices. So we can offer long-term fixed price ammonia prices because we can fix our input prices. That is also a considerable global advantage. Talking about the marine bunkering opportunity specifically, the Pilbara route from the Pilbara ports up to Asia, so China, Japan, and Korea, handling iron ore, is the busiest shipping route by tonnage in the world. And under the transformation to clean ammonia fuel, this is probably the number one opportunity in terms of being able to get a foothold in that market. The other possible supplier for clean ammonia fuel on that route is Singapore. We feel that Singapore will be part of the mix. We look forward to working with the groups in Singapore to help to supply them also. But the feedback that we're getting from the shipping companies that we're interacting with is that refueling and creating a refueling hub in the Pilbara has some considerable advantages. Namely, it cuts about 3 days off the travel route. That obviously has implications in terms of fuel savings, and also it has implications in terms of emission savings. So it is a core part of our strategy to make sure that the bulk carrier fleet is well serviced out of the Pilbara ports. And that is not only Maitland, that is also Port Hedland and the other major ports. So what does demand look like out of the Pilbara for the Iron Corridor route? just by way of giving you some idea of scale, at the moment, about 750 million tons of iron ore is transported per year. About 300 ships operate on that route between the Pilbara and North Asia. That emits about 2 million tons of CO2 per year. And our target is to reduce that emission number by about 95% by converting the fleet to ammonia. So what's actually happening at the moment is that the major shipping companies are putting in orders and have announcements for ammonia-powered bulk carriers to operate on this route. And what that graph on the right-hand side shows you is in blue, the ships which are already ordered, and in gray, the ships which have been announced to date. Between now and 2033, more ships are being announced and ordered on a monthly basis. So we expect those numbers to grow. But what that indicates is an implied demand of over 1.3 million tons per year of clean ammonia during that period. By way of scale for what that means to us, about 1.3 million tons would be the full capacity of production of phases 1 and 2 of our project. So how are we addressing the clean ammonia bunkering market? We are focused on building a very easy supply chain for the mining companies. We start by our own production, as I say, 650,000 tons per year in stage 1, 1.3 million tons with stage 1 and 2 combined. Added to that, we have an agreement with Oceania Marine Energy, who are developing the Oceania Alpha ammonia bunkering vessel that will service the Pilbara ports. So our fuel goes onto that bunkering vessel to then circulate around the fleet and refuel them. Then we have a joint development agreement between the three of us, including Pilbara Ports, who are developing the infrastructure necessary for that bunkering hub also. And then obviously the last piece of the puzzle, which was just announced yesterday, the addition of Mitsui O.S.K as one of the major bulker carrier operators on that route. They currently speak for between 10 and 15% of the fleet and are one of the top 2 or 3 bulk carrier operators in the world. So we're very gratified to see the share price action that we've observed over the last month or so, but it's been a long road, and we feel that there's still a long way on that road. We have been announcing a number of major milestones over the last 2 years, really, building all the pieces of the jigsaw to de-risk and progress this project. We feel that the intensity of those announcements will continue to accelerate, and both the scale and certainty of the project should become much more obvious over the coming weeks and months. So where does the company valuation at the moment stand by comparison to the valuation of the project itself? For those of you familiar with the pre-feed that we announced in January of this year, that had a base case geared NPV8 for stage 1 of the project of $682 million and the IRR of 15.6%. That throws out an EBITDA per annum of about $300 million. If you look at, the case of building phases 1 and 2, we had previously talked about a sequence of phase 2, 5 years after phase 1, which provided an NPV8 of $1.14 million. If we were to develop phases 1 and 2 simultaneously, given the demand that we're seeing indicated. That gives an NPV8 of about $1.5 billion, an IRR of just over 16%, and a per annum EBITDA of $600 million. So in terms of way forward, what are the next steps? When we have spoken to investors previously, the first thing to do was to put together the agreements on all of the means of production for the project. That basically was things like, gas, CO2, water, so on and so forth. The next thing was obviously offtake. MOL is the first of those, and you should expect to see more in the coming weeks and months. The next two things are engineering and execution of the project, and also financing. The base case for the project has always been to have an EPC and conventional project financing. There are two developments which is worth noting on that front. One is the possibility of a major build, own, operate partner coming into the project for a large proportion or all of the construction of the WAH2 project. The other factor is the financing alternative, where we are actually seeing interest from supranational funding agencies who would actually provide more attractive financing rates than we've assumed in our model. So our financial models, like I say, were NPV8, but they were based on a 60-40 debt to equity ratio with an 8% cost of debt. We are seeing financing which comes in considerably tighter than that, and obviously would have a beneficial effect in terms of NPV and IRR and attributable value to shareholders. So what do the coming weeks look like in terms of progression of the project? This shows a timeline through to first production in late 2029. Obviously, we're aiming for FID in 2026. As I'd mentioned already, we've achieved all of the agreements around the inputs to the project, but we will continue to tighten those up and make those closer to binding contracts as we approach FID and all of those pieces fall into place. Currently, as we've announced to the market, we are in FEED with respect to approvals and all of our environmental and heritage work. We are also in the process of progressing those commercial contracts. So upcoming completion of FEED, guarantee of origin of the emissions profile of the production. We are, as you will have seen from the signing ceremony yesterday with the WA Premier, Roger Cook, in close contact with the state government and talking about how we can collaborate to push the project and the bunkering opportunity forward. Obviously, more clarity around financing and by the end of next year, FID. So just to drill down on that, obviously, MOL was an exciting milestone in terms of about half of the phase 1 production being captured under that MOU. We are also looking to have other announcements around both bunkering and around the cogen opportunity in terms of supply. As I've mentioned, more clarity around financing, government support, and taking those existing agreements towards FID. So there's a lot happening at the moment, but there should be plenty of news flow as the project develops over the coming weeks and months. That is the presentation. we wanted to leave plenty of time for Q&A because, like I say, I know that we have a diverse audience today in terms of familiarity. So please feel free to enter any questions and Steve and I will address them.
Thanks, Charles. Yeah, just as Charles said there, if you've got a question, just type it in the box, and we'll endeavour to get through as many as we can. But I did obviously have a couple that came through via email before this, Stephen and Charles. The first one, how does yesterday's announcement build on the JDA agreement with Pilbara Ports?
Steve, do you want to answer that?
Sure. I mean, the key strategy there is to give the customers, so the mining companies, an integrated solution. And with the JDA, we had three quarters of that. We had us as the producer, we had Oceania as the bunker vessel owner, and we had Pilbara Port as the port authority and issuer of the bunkering license. But the bit that we didn't have was the actual bulk carriers that carry the iron ore. And so you can see that the MOU with MOL is very much an addition to that, and now we have all four bases covered, if you like.
All right, excellent. Just one that's come through. What can we read into the Premier being at the signing yesterday? Is there anything else you'd like to add, I suppose, on that?
The Premier has been extremely supportive. We've met with him and his ministers a number of times. We are absolutely aligned with his objectives under the Made in WA initiative in terms of developing clean energy industries and making sure that WA plays a major role in terms of adding value to its primary resource industries. We've had a high degree of cooperation, and hopefully we'll be able to announce some material aspects of that in the not too distant future.
Actually, if I could just add a point to that, I think it also just shows that the West Australian government realises the unique opportunity that decarbonising iron ore exports and that marine bunkering offers Western Australia in particular.
All right. Yep, just another one that's come through as well. I guess just in terms of competition, I suppose, do you think NH3 has a first mover advantage in the space? Can you sort of elaborate on that?
It's a good question. I'm not a huge believer in first mover advantages per se. I think they create opportunities to make advantages. We are definitely a leader. There aren't that many people who we see either pursuing the same strategy or having the ability to take advantage of the opportunities that we see. I guess the way I think about first movers is if you're a first mover, you're first in the race. That doesn't mean you'll finish first. If, however, you're first to cross a bridge and you can blow up the bridge behind you, then you have a real advantage. So I guess strategically, we sort of look for those opportunities to make sure that we are trying to keep ahead of the pack for as long as possible. And we will, we see this as a meaningful opportunity for providing clean energy to Asia Pac. So we talk about Pilbara bunkering and cogen and so on as the sort of low-hanging fruit, but this is a major energy transition thematic.
All right. The next one, in your chairman's letter in the annual report, you indicated the potential for multi-jurisdictional expansion. Can you clarify what that might look like, and how soon do you think you might be able to communicate the pathway to this expansion?
Yeah, so I guess at the moment, because of our conversations with significant regional customers, we are talking to them about what their needs are. In the same way that 3 years ago, we started with a blank sheet of paper and determined how we can meet our customer needs. we're doing exactly the same thing, planning ahead how we can meet our customer needs. And so that means not only meeting the volume requirements of customers for today, but also into the future. There aren't that many alternatives for production at the moment, but we're definitely looking at them. But there are also multiple outlets for distribution, and we're certainly engaged in that.
All right. The next one. When do you expect to see the selection of operating partner?
Not too far away, probably.
I can't say too much on that, but we're very active in discussions around that question.
Yeah.
All right. Can you comment on the addition of Brent to the team? And do you have the required team in place now or need to add more human resources?
Brent is a fantastic addition to the team. We're extremely excited to have him come on board. His experience in his relevant experience, I should say, is really key. I mean, both in terms of operations in the Pilbara, but also around clean energy, specifically hydrogen and ammonia. So he is a wealth of knowledge and experience, and is fantastic to have on board. We have meaningful aspirations. We will continue to add to the team. The team is the strength of this company. We have a huge amount of experience between Steve and Reinhard and Neil and Andrew, and the rest of the board and executive team. And we will continue to add to maintain that strength as we expand.
Thank you. The next one here, I see the analyst shows the potential industry requirement of circa 2.8 million tonnes of ammonia for bunkering. Does NH3 have the potential to cover this demand going forward?
We are aware of those numbers also, and like I say, we plan accordingly. There's work to be done for all of the expansion in terms of putting the pieces of the puzzle together. But we are aware of that potential demand.
Yeah, so I mean, just the way that we sort of think about the business is we deliberately, have multiple perspectives. So we're not just focused on, flawless delivery of phase one. I mean, that is a focus, but we're always, forcing ourselves to take a much longer and broader view as well, so that we can be well prepared for what's next. And of course, we don't just have, one potential next step. We have multiple options, because it's that option, it's that optionality that really gives you the freedom to, make the most of the business environment, however it evolves, because you can never be completely certain.
All right. I think I've got about 3 more here. Let's see how we go. If a strategic acquirer was to bid on a complete takeout, what would be the buyer's view in current project value?
Well, I hope, and I talk to our shareholders an awful lot, and I think that they share our vision in terms of the potential of this market. So I don't think a valuation of the project of the company as a single project company would be valid.
All right. I'm going to ask this one. I'll just see how we go. The recent announcement by Keppel in Singapore, does this present an opportunity for NH3 to be a preferred supplier?
I mean, my short answer is yes.
Yeah.
So if you think about Singapore, they do want to pursue clean ammonia bunkering. Realistically, they're not as well placed for the iron ore trade, which is what Charles was saying earlier, but they are very well placed for the container ship and
Ro-ros,
trade, and that is huge as well. So they're going to need a supply of clean ammonia. but they don't make it anywhere near there, so they have to import it from somewhere. And if you look at the distances from, from us to Singapore, it's a lot shorter than from the Middle East or from the US, just as Charles was saying earlier.
I think it's worth saying, and I didn't mention it in the body of the presentation, but as well as things like cost advantage and so on and so forth, geopolitical considerations are really key to our customers. And that doesn't just mean stability of supply or whatever. One of the things which the Japanese are extremely focused on emissions and having a high degree of confidence that the emissions profile of the ammonia that you are supplying them is what you say it is. And it's really interesting that Australia is their preferred solution for that because they have a higher degree of confidence in the certification of emissions in Australia than the Middle East or even North America. And I think that's partially because of the changes that they've seen in terms of things like monitoring services and so on under the current administration. So there are some key advantages that we have because of where we're domiciled.
Okay, there is a couple more here, so I'm just two of them I'm going to try and put together, gents. So hopefully you can decipher it. In the chairman's address, the company talks possibly going from phase 1 to maybe phase 3 or 4 immediately. Can the company comment? And then I'll read the second one and maybe they sort of go together. At what point would a decision be made to combine phase 1 and 2? Do you need a pre-sale via offtake the entire amount, for example, 75%?
Yeah, so I don't think I said in my chairman's letter that we would be doing 1, 2, 3, and 4 simultaneously. I said, we had talked about phases 1 and 2. We hadn't talked about what lay beyond that, and we were excited to start to talk about that. So if that's a sufficient answer to that question. But like I say, I mean, we are aggregating demand. We are getting a very encouraging level of engagement with potential customers. We are building the order book. We will then plan accordingly to be able to satisfy that demand. I don't think I can say more than that.
All right, last one, probably not a bad one to end on. How much additional equity capital do you see required to achieve FID?
It's a good question. So there are two things which have an impact on that. One is if we go the build, own, operate route, then the partner on the BOO would be responsible for the engineering component of the part that they were build, own, and operating. And so the engineering is by far the largest component of the expenditure between now and FID. There were also components of FID expenditure to do with common user infrastructure and partner infrastructure and so on and so forth. And so those are also sort of in a state of negotiation at the moment. So we will, over the coming weeks and months, we will have more clarity on that, but it's likely to be considerably less than we had originally flagged if we end up going down the route that we're sort of advancing at the moment.
All right, thanks, gents. That concludes the Q&A, and we'd just like to thank everyone who joined us today. We're really looking forward to seeing the developments of the project over the coming months and years. And I'll just pass back over to you guys for a final goodbye before we close it.
Sure. Well, thank you, Simon. And just to reiterate, we will try and keep shareholders as informed as we can. Things are moving very quickly, and so hopefully these webinars are useful. And as and when we have additional announcements, we will try and make sure that everybody's fully updated it. But we are always available to talk to shareholders. So please don't hesitate to get in touch if you have specific questions. We're always delighted to talk to our investors.
And thank you all for your support, and we look forward to very active and ongoing communication.
Thank you all.
Thanks.